Ladies and gentlemen, and welcome back to Myrna Live. Tonight, we will follow up on our discussion on the Federal Reserve Bank, and this will be Federal Reserve Bank Part 2. The question being whether or not we should abolish the Federal Reserve Bank. Um, this is triggered, of course, by President elect Donald Trump's declarations in public that he would like the economy to be a mainframe of his presidency. He talked about a number of issues. He would like to talk about he wants to concentrate on the economy. He wants to create jobs for people, and he wants to bring jobs back from overseas. And he would like to have fair trade agreements, and he would like to revisit the various trade policies that have been enacted by previous administration. Whether or not he is able to effectuate abolishing the Federal Reserve yet remains to be seen. Definitely, it is a major, it will be a fundamental change in our society. Mind you, the Federal Reserve Bank is not owned by the government. The Federal Reserve Bank is a private organization, and yet it is the most powerful institution in the US and in the world. Some might have even said that the Federal Reserve Bank is more powerful than the executive branch, the president, Congress, the legislature, and the Supreme Court combined. Why is that? Because the Federal Reserve Bank creates money. They produce money, they regulate our monetary system, and they are a Federal Reserve Bank, a private organization, not within the bailiwick, not under the oversight of our own government. So we last time we had Browne. He's again here tonight to explore a lot of the other issues concerning the Federal Reserve Bank, our entire monetary system, and the most recent regulations that had been instituted because of the second Great Recession in 2008. The reality of it is not a recession. Some people would outrightly say it's the second Great Depression. Bryan would talk about what's happening today as far as any oversight, what some people, some of our Congress people are doing right now to see whether or not there's any way to be able to put this organization into under regulation based on the fact that Congress had passed and the president had passed certain laws. So now, ladies and gentlemen, I would like to reintroduce to you Browne, and he has something to say.
Thank you, Myrna, for having me on again. Always wonderful to be here with you and interesting topics.
And you were going to say something that you said we forgot last time.
Oh, we were going to say Merry Christmas to everyone.
Well, you can wish
Merry Christmas, Happy New Year, and all tidings to everyone.
Okay. Yeah. All right. Now let's see. So before we got here, you were talking about what's going on in Congress regarding the Federal Reserve's lack of oversight.
Yes.
But before we do that, let me just show the public this graph. Our government is so concerned about the debt that we have to other institutions. And last time we talked about how our government, us, the taxpayers, are indebted to our own entities, other federal government entities, private investors, the Federal Reserve Bank itself, and domestic and private investors. The federal accounts, when we talk about federal accounts and our government owing the Federal Reserve accounts, there's two major trust accounts that I would like to point out. And at some point, we will give this some clarity. One, the federal government owes trillions of dollars to Social Security Trust Fund. Secondly, the federal government owns hundreds of billions of dollars to the Medicare Trust account. So we hear all the time about, oh, Social Security is broke, oh, there's not enough money for Medicare, but that is not the truth. The truth is that there is so much money in these trust accounts. And so when our Congress people decide not to give our seniors, our disabled people, an increase in Social Security, in reality, factually, there's no basis for that because there's so much money. And the fact is, our Congress has been raiding the Social Security Trust account and the Medicare Trust account. Okay. Here's Brian again.
Well, that brings to mind the issue of oversight, which you mentioned.
Exactly.
And it's very difficult. You know, we issue debt to get money when we haven't got money in the Treasury to pay. And so,
Right.
or we take money from one account to another account. You often hear them talking about raiding accounts, and then they have to pay it back, and then that creates more debt, and debt that the taxpayers have to eventually pay back. The interesting thing about the U.S. money is we pay interest on it, but I think we covered that fairly well last
Exactly,
time.
yeah.
But what I was wanted to speak about was Myrna and I did about 3 shows, I think, on the why the economy collapsed and why people had to be bailed out some years ago. And the result of the Great Recession, I guess they call it, was the Dodd-Frank was passed in 2010, and basically was to make sure this never happened again. And Section 165 of this act, there it is up there. I'm trying to read it because it sort of got a few points I don't want to miss. The Dodd-Frank gave them the Federal Reserve Bank and the FDIC, Federal Deposit Insurance Corporation, tools to stop that massive meltdown where everybody suffered. And one of the tools the Fed gave, the Congress gave the Fed and the FDIC was the right to have the Federal Reserve Bank examine reports each year from all the banks as to what plans they had in place in event that they would go belly up and collapse. In other words, how are they going to get rid of their assets? How are they going to restructure? What are they going to do about employment? The Fed no longer, the federal government no longer wants a massive bailout like happened. And
well, just to clarify, before, just to kind of put this thing in context, in 2000, the Glass-Steagall Act was repealed.
The end of it, yeah.
And
Commodities Act, Bill Clinton passed it, and it basically made open, what they call it, brought back the bucket shops.
Exactly.
Yeah.
Basically, what happened was the Glass-Steagall Act was a means of regulating the finance industry,
Yes.
so that the investment banking firms, like the Goldman Sachs, at that point, the Lehman Brothers, and so on and so forth, were separate from the retail bank. You know, the bank where you take your paycheck, the mom and pop retail bank. The Glass-Steagall Act was repealed by Bill Clinton, which then opened the door for the gamblers. It's like putting the fox in the henhouse.
That's accurate. But there was sort of a whittling away at Glass-Steagall and the acts that had been passed during the Depression by Roosevelt administration.
Right.
But
so then without anything in place, right, and that's why Wall Street became extremely powerful. I mean, they control the finance industry at that point and so forth. And the banks were dealing with derivatives and so on and so forth. So after
Billions in derivatives and
exactly,
trillions.
so after the collapse of 2007, 2008, then Congress passed the Dodd-Frank Act, right? So
Yes.
that's what Browne is talking about here.
Well, and so this act was basically to regulate the banking so that we didn't have to bail them out again. And before the collapse, Lehman Brothers, which was the I think it's Lehman Brothers for sure, they had $639 billion in assets. I want to get this right, and they had 209 registered affiliates in their financial network. And that was the first one that caused the great collapse, and it sort of was a house of cards after that. Today, J.P. Morgan has 2.5 trillion, and that's nearly 4 times more than Lehman had, and they have over 3,400 subsidiaries. So I listened to a TV show with Senator Warren and this head of the Federal Reserve, Ms. Yellen, Janet Yellen, and Senator Warren made the fact that Congress mandated that every year the Federal Reserve Bank monitor the plans that these banks that they control, and they control most of the banks, have in case of a catastrophic meltdown like happened in 2008. And Ms. Yellen was not able to produce one report that she had adjudicated on, whether it was satisfactory.
The loans.
Oh, that's sort of separate to this issue a little bit. This is a very important issue. But she's got thousands and thousands of pages of paper from these people, and they're going back and forth. And I was impressed with Senator Warren. She said, look, but the public has only seen 37 of these pages. That's not many, considering they've got 3,400 affiliates that they have to report on with a plan. But have you, and she kept boring in, have you authorized any of their plans as being satisfactory? And she couldn't answer in the affirmative. And of course, Senator Warren's time ran out. I thought it was very important because it makes me quite scared, Myrna, that we might be in the same situation again.
Exactly, and that's just the thing. And that's why this is a key issue right now, because when you watch the finance shows, right?
Yeah.
And they're talking about the rally in Wall Street, how the stocks are going up and, in prices so much, and that they're just waiting for this bust to happen.
And that's a very good point. A lot of people are asking, does the Federal Reserve Bank influence the stock market, the market,
Right,
the stock
exactly,
market, New York Stock Exchange and other markets? And by law, they're not allowed to do it. But we know if they change the federal funds rate up, they certainly bring it down. They lower it, theoretically, it should go up. That's sort of the discounting process. But the other item that a number of people are concerned about is the Federal Reserve using its cobweb network of banks all around the world with its power to loan money and have them interfere with our stock market, which are not. And this is one of the reasons Dr. Ron Paul wants a complete audit of the Federal Reserve. What do they do? Who are they? Who is this organization that is the most powerful, as you said, not only in the United States but in the world,
all over the
and
world.
has control of the U.S. dollar, which is still the currency.
Well, that's why I want to talk about the loans, the secret loans.
Go ahead, put them up. I've got them here.
I would like to talk about.
This is very revealing.
I mean, this is you know, the fact is, folks, this is the American taxpayers' money. When you talk about people not having homes or not having jobs and not having food to eat and our water being poisoned and the environment is not protected and our veterans who fought in the war are homeless. I mean, it doesn't take that much money to fix those issues. How much does it take to build affordable housing? Not much. When you look at the kind of monies that the American taxpayers have subsidized, which the taxpayers are not aware of. Let me show you this one graph that Browne, pick up from his research. So this graph shows the secret loans made by the feds from December of 2007 to July 21st of 2010. Let's talk about this. Let me just read this incredible amount of dollars there. The Federal Reserve gave loans to Citigroup for $2.5 trillion. All right, $2.513 trillion. Morgan Stanley for $2.041 trillion. Merrill Lynch for $1.949 trillion. Bank of America for $1.344 trillion. Barclays Bank for $868 billion. Bear Stearns for $853 billion. Goldman Sachs for $814 billion. And the list goes on and on and on, as you can see in that chart. Now,
Myrna, one question. You asked me what would be a good alternative to the Federal Reserve.
No, after we went through all these trillions of dollars,
yeah,
right?
And we talked about that on the way over.
Exactly.
And
I mean, it's like, it just kind of, my blood pressure goes up. when I, we walk down the street and there's a young homeless couple and one is pregnant, it's just like, oh God, it doesn't cost that much to help out these people, right? And then here we are, we're talking about all the trillions of dollars that we, the taxpayers, are subsidizing, right?
Yes, and what Ron Paul and John F. Kennedy, we talked about, they were trying to get the functions of the Federal Reserve Bank away from this independent private company under the Treasury Department, where they'd have a lot more control. And could that be done?
Exactly. That's the question. It's like,
they
what
financed the Civil War that way. That's when they first consolidated the currency.
They also killed John Kennedy. So they also killed John F. Kennedy. We don't want to go in that area.
Well, John F. Kennedy printed Treasury notes,
right,
which you could use as money.
Right.
But he backed them by silver, I think.
Yeah.
But why couldn't the Treasury do all the functions that the Federal Reserve Bank does and be under the control of the U.S. government and not be subject to foreign influences or whims unless we have an effective audit of the Federal Reserve Bank, I'd like to see it morph somewhat to be under more control. And I just want to make that one. This failure of Miss Yellen to answer the senator's questions
amazed me. This is the Federal Reserve Chairman.
She was great. Yeah, I recommend anyone go on C-SPAN and look at it.
Right. So, anyway, I meant to say that I saw this hearing one time. Alan Grayson had a hearing about the Federal Reserve Bank, and there were like trillions of dollars missing. And he kept on hammering and asking.
He's very good, isn't he?
Oh, yeah, he's excellent. He was asking the Federal Reserve representative, what happened to the $3 trillion? And the person says, well, we don't know. I mean, that's like the Pentagon not knowing what happened to.
Well, one thing the Federal Reserve has, we never know when they're going to do something. There's two types of economic policies, but there's non-discretionary and discretionary. And Milton Friedman, who incidentally spent his last days in San Francisco, wanted to replace the Federal Reserve Bank with a computer that every year, year in and year out, without changing, increased the money supply at 3%, which basically was...
Okay, but Brian, what would, if let's say, right, if let's say President Trump is able to get the people, the American people support behind him and say, okay, we're going to abolish the Federal Reserve Bank, what would be the replacement?
Well, I think it would be the Treasury.
Okay.
And what functions of the Federal Reserve Bank serve other than this churning that they do and things like that the Treasury couldn't do? I'm sure a lot of the employees would be transfer over. After World War II, during the end of the recession, during World War II, and just after it, the U.S. government had tremendous influence on the Federal Reserve Bank. It doesn't have that influence. No. They go their own way.
They
and
do
we don't know
what
the way
that
is. It's a bit like, what was it, Frank Sinatra going my way or something? Doing it my way.
So anyway,
it's a massively intense subject and complicated.
It is, but the point is, this is so fundamental. It's like I was asking Brian, why do we owe them $2-3 trillion, right? And he goes, well, I don't know. But in any event, ladies and gentlemen, here we go. It's something we should be talking about, that we should be familiar with, and the American people have the right to challenge our government, to explain, and our politicians, our representatives have the right to challenge the Federal Reserve. Well, with that, thank you very much, and we'll see you again next time, and Merry Christmas, and a Happy New Year from me and from Brian.
Thank you, Myrna.